And the crypto market has been plagued with a number of issues over the past week alone. The largest cryptocurrency, Bitcoin, briefly saw some recovery this week, but is still struggling to break out of its tight trading range. Joining me for a crypto market update is Marius Reitz, Luno's general manager for Africa. So Marius, crypto very much a trend of volatility. I'm looking at the range over the last week as well as the 52-week range, and it's volatile. I think that's really the word to summarize it. So in light of all of this and the past week's performance, how would you describe this? How are you interpreting the trend, and how can you make sense of this?
Hello, Tanya. Yes, at Luno, our mission is to put the power of crypto in people's hands. So we take a long-term view of the market. We think that a cryptocurrency will solve some of the financial problems that people face, just in a better way. But the reality is that for most people, Bitcoin or the cryptocurrency industry right now is an investment opportunity. So people view it as an asset. And so what we've seen over the last couple of months, we've seen the cryptocurrency market moving or being in sync with global financial markets. Cryptocurrency industry is a $1 trillion asset class at this point, so it's not shielded from any macroeconomic factors such as inflation or fiscal policy, etc. And so naturally, it's been under pressure for the last 6 to 9 months. We have been through similar cycles in the past where the price would rally, such as in the fourth quarter of last year, just for the price to pull back. So currently, as you said, we're trading in this $19,000 to $25,000 range. The price would have to break out of this range above $25,000 for us to see some sustained recovery. So I think for the foreseeable future, we will continue to see price volatility. And looking back at the previous cycles, it will probably still take a couple of months for Bitcoin to break out of this range.
Now, taking the cryptos taking the cryptos together, and I'm looking at the 52-week trend. You do say you have a long-term range overview. Now, looking at how the markets have been moving over that range, we see the similar type of volatility. So what economic data, or economic or not actually, what type of data would you say is used to price in for crypto?
Look, I think so. There are a couple of trends. So firstly, typically when we see price volatility in the markets, investors or traders typically move from more riskier cryptocurrencies like altcoins, which refers to everything else except for Bitcoin, into stable coins such as USDC, which is a cryptocurrency that's pegged to the US dollar, or into Bitcoin, right? So what we saw over the last couple of months is we saw volumes in most cryptocurrencies declining drastically, but we've seen a stable volume in USDC, which is one of the most popular stable coins, which is an indication that traders exited their positions and they're finding refuge in some of the more stable cryptocurrencies. So I think one of the key indicators will be as soon as we start seeing traders moving from USDC and other stable coins back into their crypto positions, that could be an indication of traders moving back into their crypto positions. But I think in general, we in very uncertain times, crypto is a risk asset at this point. So when investors and traders need cash, crypto will be one of the first investments in the portfolio that they will look to liquidate to free up some cash. So I think until such time that we've reached the top of the inflation curve and interest rates, we will probably see an uncertain and volatile cryptocurrency market for the foreseeable future.
Okay, so you mentioned inflation, interest rates. Have any of your fundamentals regarding cryptos changed as a result of the recent economic data?
No, so as I said, at Luno, we take a long-term view of the market. We had some very exciting updates and upgrades recently in the crypto space. Ethereum, which is the second largest cryptocurrency according to market capitalization, recently underwent a very successful network upgrade, which reduced the energy consumption of Ethereum by 99%. So it's made Ethereum a green crypto and a green network. And it's also laid the foundation for future upgrades to address issues around throughput of the network, so the number of transactions that can be processed per second, as well as reducing the fees in future. So during times of price volatility, and as we call it, the crypto winter in the crypto space. There's a lot of building that's happening, a lot of improvements that's being made to various platforms and blockchains, and that's very exciting. Something else we see during times like this is regulatory action or regulations being fast-tracked. So that's a positive. We think that regulations will bring clarity to consumers. It will protect the public, and it will make it easier for investors to separate licensed platforms versus unlicensed platforms. So there are pros to market downturns as well. But as I said, I think we will, based on previous cycles and the global economy at this point, I don't see cryptocurrency breaking out at this point and returning to its all-time highs that we saw in November last year.
Yeah. And Ethereum, the merge, I'm looking at Ethereum is up 0.65% currently. What's next for Ethereum after the merge?
So Ethereum, compared to Bitcoin, so the Bitcoin blockchain only processes incoming and outgoing transfers. When you look at the Ethereum blockchain, it's the foundation for many different use cases, from NFTs, non-fungible tokens, so recording the sales of NFTs, to powering decentralized finance, which is a new world of financial applications operating in a decentralized manner, to the Ethereum network itself. So it houses many more different use cases and applications compared to Bitcoin. So I think this upgrade was absolutely necessary. It has laid the foundation for future upgrades, for sure. From a price perspective, the Ethereum price had a good rally in the lead up to the Ethereum merge. The price rallied by 35% or so. Since the merge, we saw a pullback of roughly 15%, and the general consensus there is that the merge news had been priced in at the time of the merge. So hence the slight pullback. So I think for Ethereum, we will continue to see new applications, new innovations built on top of the Ethereum blockchain, which is very exciting. And in future, we can expect to see improvements in terms of the throughput, so more transactions being processed, which is currently one of the challenges with the network, and it makes it difficult to compete with even established payment rails such as Visa or MasterCard. And it should also drive down the cost as well. So those are some of the things to look forward to.
So in terms of the use cases for the merge, do you see a difference in terms of the investors and the traders for Bitcoin versus Ethereum?
So yeah, perhaps it's a case of different horses for different courses. I think Bitcoin is the US dollar of the crypto world. It has most adoption. It has the largest market capitalization. It's currently being used or being seen as an investment, mostly as a store of value. So it's been able to hold its value over a long period of time. What we see higher lows. The previous bear market, the Bitcoin price dropped as low as $3,000. Now we're probably at the lower range of the price during the current bear market, and the price is around $19,000. So over the last decade or so, it has held its value nicely. So Bitcoin is more at this point more a store of value for investors, whereas Ethereum also has a value that's determined by supply and demand, but Ethereum's value over time will be derived through the utility, right? So as I mentioned, it powers many different use cases, from NFTs to decentralized finance, which is a whole new world, and includes things like decentralized lending and borrowing. So enabling people, especially across emerging markets with crypto holdings, to borrow fiat or other cryptocurrency against their crypto assets as collateral. So there are many different use cases. So I think the more use cases and the more value that derive from the Ethereum network or blockchain, that should have positive impact on Ethereum's price over the next couple of years.